What is up, everybody? Welcome back to another episode of the Rethink Everything podcast. And can you believe it? We have launched in this week books 14 and 15 in our series. And the book we're going to talk about today, out of 15 books, it is my favorite cover. It is so cool. And so I'm excited to introduce to our audience Mike Eising, who, Mike, you didn't bring us the sexiest topic for us to cover, but I would say that, you did a great job of taking an unsexy topic and making it as sexy as possible.
Well, I tried.
Mike, before we jump in, tell everybody a little bit about yourself.
Okay, I'm a mortgage guy. Been a mortgage guy. This will be my 37th year in the industry. So started in sales, went through operations, wrote education courses for loan officers for years and years and years. And when everything crashed in 07, 08, I got moved into compliance and risk because there was a need for people who had operational knowledge to move into those spaces. So I've been doing that since 07, 08, and just kind of moved into it and kind of through attrition, promotion through attrition, right? Everybody
Sure.
retires at some point in time. So you kind of move your way up through the ranks that way.
Mike, how did you come to the conclusion that, man, you know what compliance and risk needs? It needs a book. Like, what brought you to that?
It was kind of a combination of a bunch of presentations that I do. So I was starting to get asked to do a lot of webinars, a lot of podcasts, and a lot of in-person presentations. And what I did is I put them together, and I found a common theme. The theme really wasn't compliance and risk. The common theme is judgment. It's rules exist, policies exist, procedures exist, but we still try and live outside of those. So what do you do? What do you do in those situations? And how, what's the mind frame of a compliance person when those situations arise? And that's what I wrote the book about.
So what do you hope for everybody that reads the book? What do you hope their big takeaway is from it?
I think a lot of it is, we do get into where is compliance going, in the next few years. And a lot of that has to do with MISMO and the mortgage compliance data set and all of the technology that comes around. Because, let's face it, the mortgage industry, it's a commodity. It's a mortgage. It's a secured lien on a property. That's relatively unsexy as everything goes. But really, mortgage companies are tech companies who do mortgages. So we have to keep a mindset of everything we do is tech minded. But what I tried to get across through this book is what happens on the one-offs. What do you do when you have that sideways loan at the end of the day, and how do we think about it? We're not here to do bad loans. We're here to do loans compliantly.
Yeah.
And the biggest part of that is we're here to do loans. So my compliance group and my take on it is, let's find every possible way to get a loan done compliantly. And, every once in a while, you'll get up, you're back against the wall where you just can't find a rebuttable presumption of an argument. Like, just give me something to argue so I can make a case for this loan. And that's really where I'm at with this. But it talks a lot about the funniness, the gallows humor of compliance, things that I think are funny. My wife is a former ER nurse, so she's kind of got that gallows humor on her side of the business. And I think the book is funny, to be quite honest with you. I think that I've taken it to a point to where you can kind of see the sarcastic humor behind what we do, but there's some truth to it. There's a little bit of truth to everything in it.
So, Mike, obviously, we would want anybody in compliance, right? Like there would be departments in every mortgage company that would be the natural suitors for this book. But I would assume, like, would it make the industry better if every loan officer, every mortgage broker, if they picked this up and
Yeah,
gave it
this
a
isn't a
read?
compliance. It's not a compliance book. It's a mortgage book. And, and honestly, it kind of transpires, even the mortgage industry, when you talk about the risk and decisions that are made, but it's really mortgage centric the way it's written. But yeah, I would say that the perfect person to read this is a newer loan officer so they
Okay.
can kind of avoid some of the pitfalls. It's great for operations folks. It's great for internal audit, because it kind of gets you in the mind frame of why are we asking the questions that we ask, and what kind of things do we see on a daily basis that kind of go sideways.
Mike, what would be the outside of mortgage, who wouldn't maybe think about picking up this book that you're like, "Man, they should get it. They would like it, they would learn from it." Who would that be?
Anybody who is in any kind of finance and or real estate,
Okay.
because it talks just about the general, how do we keep a loan from going bad at the very end.
Yeah.
That's really, really where the book goes.
So, you told me before we hit record that you did kind of a TEDx style talk yesterday, and so talk about, because you said that the talk was about judgment, which feels kind of oxymoronic to in a book about compliance, where it doesn't feel like judgment should really exist when it's made up of all these rules. It feels like there's black and white everywhere, and yet you did an entire talk on judgment. How like, talk us through the talk you gave yesterday and how that plays into compliance and risk.
Yeah, which that's going to tie into a lot of things with the book. So, the book was inspired by, number one, putting all my pieces together of things that I wanted, that I have talked about over the years. But Delilah Ramos was really the
Love Delilah.
inspiration behind the glue to the book of why do we do what we why did I write it the way I wrote it. And this all comes into a really personal episode of, a time in my life, my family's life, where my son was hit, by a distracted driver, and he was paralyzed from the neck down. And kind of cruelly, the only injuries he had were from his neck up. So the only place he could feel pain was from the neck up. His mandible was crushed, his head injuries, broken neck. And we went through a year of ICUs and hospitals, and um, Elon Musk Neuralink trials and everything you could possibly think to make him better, if we could make the situation less bad than it was. And he passed away, March of last year. So, um, permission to cuss, I
Of
guess.
course.
And this,
Absolutely.
so I was always kind of afraid to do public speaking and things like that. And I was putting in a proposal to do a talk out in Washington D.C. for mortgage bankers, a real big one, 1,000 people in the audience.
Yeah.
And I said, "Man, I don't think I want to do this." He goes, "Dad," he goes, I'm laying here in a hospital bed. I'm never going to walk again. I'll never get up and do a presentation." He goes, "Just fucking do it. Just do it." And that's been our family's mantra since he said that. If somebody, like, so I said, "Man, I should write a book someday." Yeah, I've written thousands of education courses for loan officers.
Right.
So writing's it's not a thing for me. It's not a
Yeah.
scary thing. Writing this was scary because this is me writing.
Sure.
This is my thoughts and my humor. But I just got to the point of just do it, right? So, so that's the reason the book looks like it does. That's the reason it's got a hidden donut on the front page, and it's all an homage to Zach. So,
Awesome.
so basically, what happened? Let me go back to the talk,
Yeah. Yeah.
and why I chose judgment. Well, number one, we don't need more rules. We don't need more regulations in this industry. We just don't. We write policies, we write procedures, we write guides, and we put controls into loans and everything. We've got all of our loan operating systems and everything that we do. that have all these stops and controls, but loans still go sideways. And why is that? What can we do differently to keep them from going sideways? And what kinds of things do we do, and what kind of decisions do we make that make a loan not go easily? One of the lines in the book is, I like boring. I like boring loans. Boring loans close.
Yeah.
Sometimes you have an exciting loan that's just kind of fun because the way it's structured. That's great. I love that. I love a puzzle, but I don't like a puzzle at 4:47 p.m. on a Friday,
Yeah.
right before the loan's supposed to close at 5 o'clock. And those are the things that comes down to judgment. Somebody knew somewhere along the way that this should have been brought up before. And one of the most dangerous things we say in our industry, or in any industry really, is this should work. And it's this little phrase that we say is, this should work. This should
Mm.
work because we're doing it for the consumer, or this should work because, we're doing it to save a business relationship, or this should work because it worked before. We got away with it before. And that's a really dangerous line to use, because if you keep using that line, it starts making decisions for you. It puts you in a situation to where a decision is on a decision, they stack. And pretty soon you're looking in front, you're standing in front of a decision you didn't recognize making that decision in the first place. So that's really the premise behind the book of how do we switch our mindset and rethink, right? What do we need to rethink about mortgage risk and compliance? We're really not here to keep loans from closing. We're the bumpers on the bowling alley, as I put in here. Um, we're here to keep the ball going down, and you can still hit a strike. But as soon as you start feeling that bumper, there's a reason it's there. It's to keep you going in the right direction. We're not here to stop your loan. We're here to get it and get it done correctly. So,
Do you,
you
do
know,
you
I
think do you think your book is designed to help bridge the gap from the LO seeing compliance as like the enemy to some degree?
yeah. Oh yeah, for sure, for sure. And,
What
and operations folks, closing, title company folks, it's all, we all play the same. We're on the same team,
So
and we're
tell
all,
me from both sides,
yeah.
what what is the compliance person thinking wrong about the LO, and what is the LO thinking wrong about the compliance department?
I'll start that backwards. What the
Okay.
the LO is thinking wrong about the compliance person is we're here to kill their deal, and
Okay.
we're absolutely not. From the compliance standpoint, it's probably one of a couple things. Depending depending how many times we've had run-ins with the loan officer. One is, are they trying to pull a quick one on me, or do they not fully understand what the ramifications of the way they're trying to structure the loan is, or did they know something and they didn't tell me soon enough? Were were they afraid we were going to say no, so they didn't bring it up?
Okay.
Um, and usually, if we know early on, we can restructure a loan, or come up with a solution. The worst failures you have in the mortgage industry are not repurchases of loans. They're not loans that go into early payment default, and those are really bad things. The worst things that we deal with from a compliance standpoint is a customer saying, "I wish they would have told me. I wish I would have known. Um, I wish I would have known to do this 2 weeks before closing, or a month beforehand when I first talked to them. I wish they, or I didn't understand something properly." I think an educated customer is a good customer, and the more you educate your applicants, and your loan officers. My loan officers are my clients too. I'm
Sure.
I'm still and I'm still in sales, right? I'm trying to sell
Right.
why I've got to
Yeah.
switch the loan up for you at the last minute. So you never get out of that. But we're all here to get loans done and get them done smoothly, and as fast as we possibly can.
Mike, how do you think it should look different? Because earlier you'd mentioned that like a new loan officer would be a great person to buy this book. What do you think if you just look at the industry? what could these companies be doing a better job of earlier to help this be less of a problem down the road?
Well, I think a lot of the issues that we see nowadays is because we have applicants that are on their phone. They apply on their phone. They upload all their docs on the phone, and no one really has a conversation with
Mm,
the customer saying, "Can you take 10 minutes so we all are on the same page and we all understand where we're at? And let me make sure that the loan that you applied for is really the correct loan for you."
right.
And make sure that we are all on the same page. And when you're talking to a financial planner or a stockbroker or something, one of the biggest things they do is talk about they do a profile of the person, and they need to figure out, is the product I'm giving them suitable, and they're required to show documentation of this, whether Series 67 or 63 or whatever it is. And that's not a requirement in the mortgage industry. And a person's home, in most cases, is the largest asset that they're ever going to have, except for maybe retirement and things like that. So, when you're talking with younger customers, it almost always is their biggest asset. So why wouldn't you take the time to make sure that what you're giving them is, number one, the best loan that you can give them, not just the rate. Maybe the rate's not as important as paying it off in 15 years, 10 years, 20 years. Um, but the suitability is a big thing. And having that connection with a customer prior to closing, it's a big deal. It's a big deal. And I think a lot of things get lost and go and get to closing or soon, approval stage of a loan, because we really didn't have those one-on-one conversations with customers.
Right.
And it's a generational thing. And how do we get beyond that? I get them on the phone if you can. A lot of customers just don't want to, which I understand. Yeah, or
Well, and
schedule.
I think a
Or
lot of
just,
LOs don't want to,
yeah,
you know?
yeah.
They see that as an impediment to their process that they're trying to scale and make faster, right, and more efficient, when the reality is, like, we we need the humanality piece of this to
You
remain.
s you still do, because the first person that a customer should talk to shouldn't be me
Right.
when it goes sideways. And that's if I'm the first person they've talked to, then we've got a bigger problem,
Yeah,
all the way
so,
along. Yeah.
Mike, with that being said, where do you see AI impacting what you do both positively and negatively?
Well, I think the whole industry is moving more to complete data sets as opposed to individual loans.
Okay.
So I know that the SES, which is the state examination system, is moving towards a mortgage compliance data set in the next few years, which I do talk about in the book a little bit.
Okay, good.
Um, of Mortgage companies as a whole are going to be judged less on individual loans as they are on patterns. And AI is really good at catching patterns. It's really good at um, intelligent document processing and things like that, scraping docs and feeding them in, and getting you kind of in a direction of where you need to go for a loan. Now, you're always going to, I say you're always going to need a person in the loop. Um, I think our regulatory agencies are going to require some kind of person in the loop to make sure that there's a
Sure.
person overseeing your
Yeah.
AI, to negate hallucinations and being able to audit and repetitive, being able to reproduce the decisions that were made. It's okay to have an AI make a decision on a loan,
Sure.
um, but you need to make sure that you have somebody in the loop double checking, validation and those kinds of things. I think that's where the industry is going, and I think that clients are expecting loans to be done, a mortgage to be done as fast as a credit card application. I think, hey, my credit's my credit, right? But you're still dealing with houses and messy septics and wells and
Yeah.
termites and mold, all the stuff that still comes in with houses. There's a lot of moving pieces. AI can do some things to help with that. It can help with your you know, diagnostics of photographs for appraisals and things like that that may catch things or may wave things through that may not have got caught before. So there's a lot going on there, and I think the speed is going to be where you see AI really playing a part.
Absolutely. My last question, Mike, because we're running up on time. Do you see? I'm a marketing guy, right? That's my background. I've for almost a decade now. I've been coaching lenders about how to use the internet, how to use social media, how to educate people through content. Do you think that if an LO were to grab your book and as they read it for themselves, but then also they were regurgitating those things in an educational way to their audience, do you think that would help the the deals that go sideways left less often?
Yeah, I do. I think one of the biggest issues we have is a human issue. You can add all the technology you want,
Yeah,
but there's a human issue, and there's a trepidation that we have of you're afraid to tell someone no because you think it might be a failure. Um, I think you need to get to the no's as early and often as you do a yes with a customer. If something starts going sideways, you need to let them know often and early so they can be involved. They know their situation better than anyone else does, and they can typically offer more solutions than we can as lenders to get a deal fixed. Um, they're going to have the opportunity to say, "Oh, well, wait, I have a document that says this, or has says, or we took care of that years ago. Let me clear that up." And if you do it as early in the process as you possibly can, that's really the premise from the loan officer side. In here is if you knew something on Tuesday, don't wait till Friday to tell me.
right.
Tell me early so we can so we can get it fixed before it's sitting, where before the closing becomes a therapy session between the realtors and the loan
That's
officer and
right.
the borrowers and the sellers, and
That's right.
you've got movers scheduled and everything's a hot mess. Let's get in there early so we can set expectations and hopefully come to some solutions.
Mike, I am so honored to have you in the Rethink Everything family. I'm so excited for this book. I'm We're going to be doing our part to get you in front of every mortgage company on the planet because they need to be maybe not more focused on this, but they don't know the right solution. And I believe that you can be that solution. It's also just really cool for us to be able to honor your son in the way we were able to with the look of the book. And so, man, thank you for trusting us with this process. Um, it's really cool, and I'm just beyond honored. And so, thanks for coming on, brother.
Thanks for having me. And thank you for all your help. Your team is amazing.
Good,
Absolutely amazing.
they're great,
Yeah.
guys. Remember, the Rethink Everything store is available. If you saw me sipping on this cup today, this is available for
Oh,
purchase at
and here
rethinkeverythingstore.com.
and here's the
That
book.
book right there, my copy will be here tomorrow, so I haven't got to put it in my hands yet. But don't just listen to these, watch these, and do nothing. Go get it. Go get 10 of them. Go get a coffee mug. Go get a t-shirt. Let's grow this Rethink Everything brand together. And guys, we'll see you on the next one. Bye, everybody.